A very good afternoon to one and all present here. The Finance and Investment Cell of Shri College of Commerce welcomes you to today's session. We are honored to have among us our guest of honor, Mr. K.V. Kamath. Welcome, sir.
Thank you.
Mr. Kamath is a veteran banker and a Padma Bhushan Awardee. Sir was the first president of the New Development Bank of BRICS countries. He served as the managing director and CEO of ICICI Bank from 1996 to 2009 and also the non-executive chairman of ICICI Bank. Under his leadership, the ICICI Group has transformed itself into a diversified technology-driven financial services group that has leadership positions across banking, insurance, asset management in India, and also an international presence. He has also served as the chairman of Infosys Limited from 2011 to 2015. He was named the Businessman of the Year title by Forbes Asia and the Business Leader of the Year by Economic Times in 2007. He has also been a co-chair of the World Economic Forum's annual meeting in Davos. Last year, Sir headed the committee on one-time restructuring of loans, which were impacted due to the COVID-19 pandemic. The committee named 26 sectors which were in dire need of financial assistance by the banks. It is an honor to have Sir here with us today. I now request Devashish Miglani, President of Finance and Investment Cell, to welcome Sir.
Good afternoon, sir. I, Devashish Miglani, on behalf of Finance and Investment Cell, Shri College of Commerce, would like to welcome you to Shri Financial Forum. I also apologize on behalf of our teacher in charge, Ms. Saroj Joshi, professor at Shri College of Commerce. She has been experiencing certain network issues due to which she hasn't been able to join. It is a highest honor to host you. Your experience in the field of banking has been extremely inspiring. We look forward to learn from your wide experience. And sir, over to you. We all have been waiting to hear you out.
Thank you. Thank you, my young friends. Firstly, let me say that I'm delighted to speak to young people in these times of stress. But more importantly, I hope everyone near and dear to you is well. Please take extra care, stay safe, stay well. We will talk on a subject which is, I would think, related to this whole pandemic as it impacts us in an economic context. And I will title this as Disruptions in the Way Ahead, because to me, what the pandemic has thrown up is a whole disruption to the life that we all have known. And to make it simpler, I will cover this under maybe 4 broad heads. Most of these I will cover from my own personal experience and looking around at what is happening around us in the economic context. The first is resets. Resets. I think I'm talking of a reset of the mind. And I will detail this as we go along what I meant by this, because this has had a large bearing on what has happened over the last year. The second aspect that I will touch on is the rise of technology. The rise of technology, digitech, what I would call digifinance, and everything around it and its impact. Third, of course, is what underpins today's chat, which is economic recovery, productivity gains that we have seen during the course of this economic recovery, actions by the government, which upfront I will say were very well thought out and executed. Similarly, actions by the Reserve Bank of India, which also were very well thought out and executed. And then I will conclude as to where we are and maybe put in context the current uncertainty, the uncertainty that has come up in the last 2 weeks or so. At this point in time, I don't think anyone is able to really predict what this uncertainty means. Still, we have a little better grip on what numbers are indicating to us, and whether those numbers, numbers of people impacted by the pandemic, whether we are able to bring them under control. But I'll touch upon the current scenario in terms of, like maybe a caution note to what I've been saying. So let's move on to what I sketched as the 4 or 5 points I will talk of. I will term them also as hallmarks of this disruption. The first is the resets. Reset, I would look at it as a reset of the mind. And that reset of the mind took place a little over a year ago for all of us, for you also, I'm sure, by the third week of March, we suddenly realized what and how will we run our lives if everything is locked down. I don't think in our lifetime, nor in the lifetime of our parents, we have seen a situation where everything was locked down. You even had a worry as to whether the supply chain for, say, food from the farm to your table was going to be disrupted, or was it going to be, working? Of course, then comes the local distribution, the grocers, and so on and so forth. That's one end. The second was, what will industry do? And clearly, if you remember a year back, March, April, up to May, things were shut down. There was no industry that was operational. Things were shut down. And so you were figuring out, how do you manage? Thirdly, I think this is the most interesting part to me and to all of you young people. What do you do with technology? In the sense that is technology going to be some sort of a solace in all these things? Will you be able to work? Will connectivity be there? How do you manage? Here I want to maybe spend 2 minutes, because this in a way underpins one part of what I have learned. And I'm sure I want you to take this as a learning. So my learning was, and I'll give a practical situation. I was still the president of the New Development Bank, the BRICS Bank. I'm in India. I'm in Mumbai in my home. I have to conduct not daily, but maybe bi-weekly meetings, monthly board meetings. There is an annual meeting of the finance ministers, and so on and so forth. And I have a rickety old internet, which I had set up in 2009. And then when I left in 2015 for China, that was okay. It's still manageable, but not for what I'm describing, live video streaming with the multiple users and so on and so forth. So I had to put in a Wi-Fi, but everything is locked down and nothing is available. Amazon won't ship. Anyway, long story short, I had to figure out what sort of a Wi-Fi set up. How do you go about setting it up? And I did it myself. It was the first reset of my mind. I did it myself. I bought what I'd call as a mesh Wi-Fi. I don't know, all of you young people would have heard of it. You don't need routers and you don't need anything complex. Virtually plug and play, a little bit of software, but not too much. And I'm streaming today as I talk to you, 500 Mbps on my home play. I'm in for games. I can do gaming. I can do anything that I want on with the speed that I'm getting today. Now, not important that I'm doing it. I'm saying I hope everybody has reset their minds to do things on their own, because we had no choice. So the first 2 months taught us to be able to do things ourselves. And I would actually paraphrase it and say, we learned in a way to be Atmanirbhar in our own lives, because there was nobody to help us. And this receptivity to change, you would see, came about in your home too, not just yourself. In my case, my wife, who was also a senior person, had no clue how to use, let us say, a Google Pay or any of these payment apps. Yes, in China we used WeChat Pay, but none of the things that were here were used. And then they started, the women in the building started setting up WhatsApp groups for ordering stuff. Then it went to Excel sheets, and then it went into Google Sheets and so on and so forth. Now, older people reset their minds to be on these platforms. I won't talk too much about this, but I'm underscoring a point that you got something powerful with you. If older people could do this, you youngsters can rewrite history, as it were. So you need to ask yourself the question whether, in terms of resetting your mind, you are happy with what you have done, or do you need to do more? If you're happy, fine. If you need to do more, please do it, because this doesn't happen. This will not happen another time. This is a once in a lifetime event to reset your mind. So please go for it. Other thing about this reset was it happened in a blink of an eye. It happened virtually overnight. So you will have to learn to cope up and cope with things and do it at speed. You learn to accept if there's a challenge, but I'm going to accept that challenge and I'm going to respond and I'm going to win. I think that is required. And all these things, acceptance, implementation, execution, have to be in real time. And that's what India did. That's what corporate India did. They also had their minds reset. They accepted it in a blink and they went ahead and do it. So whether it was at a company, at an individual level, at a corporate level, and if it was a firm, their clients level, everybody, I think, during the course of the first 2 months, reset their minds, and I would say lateral thinking became a way of life. And I think this is critical for all of us. And one key message that I got from corporate India during this period, which probably is useful for student India also, and also your administrators. Very interestingly, someone put it this way. So I asked this question: did your technology, support you? Did you find any shortcomings in technology? So one young man answered, saying that, sir, our technology systems were always capable, we think. It was the policies and the procedures which were not in tune. And what corporates did was redid their policies and the procedures and leverage the technology they always had. I mean, we did it at the New Development Bank. So I was able to run the next 6 months sitting in India while the bank ran their, and did all that it had to do and met all its targets for that period. So clearly, I will leave this thought with you. I hope and trust reset has happened. If not, it is a time for reset. Second aspect that I had put in my 3 or 4 points was technology and the impact of technology. And here I want to link a few points. And one I will put under what I would call like a catchphrase. Technology today is demographic, it is democratic, it is dematerialized, it is digital, and it is disruptive. I think young minds understand all these things, but I'm going to just indicate to you what is what. Demographic, you all understand. It is your world today. Demography is in favor of the youth of India, if not the world. So demographic power is with the young who are, I would think, adept users of technology and can do a myriad things which maybe the rest of the population can't do. But that becomes a very key, I would say, fulcrum for technology to be leveraged. Demographic. The second is democratic. That's very interesting. It is not in the context of the way countries are run as a democracy or some other system, not in the political context. I want to take a simple example. The phone, as we know it today, which is a universal device. Connectivity, across India, across the globe. The internet and so on, which makes it a democratic process. It makes everybody equal. So knowledge can be disseminated at an equal level. Information can be disseminated at an equal level. Access to technology is also at an equal level. It used to be unequal a few years back when we had the cost of access was very high and certain people were left out. There are possibly people who are left out even today, but it's catching up very fast. The last 2 years has meant that bandwidth is not an issue and accessible bandwidth is getting to be not an issue. And I'm sure we will work to make, like everything else, access to technology universal. It's already become universal in large parts of the world. That's what I mean by democratic. Democratic access to things around you in the technology context. Dematerialized. It is a very interesting phrase in the context that I'm using it. That is, take a look at an iPhone or any other device that you hold in your hand. It does what? At minimum count, maybe 8 to 10 jobs that discrete devices did earlier. So those devices have been dematerialized. They are gone. And you now have one device which does the work of all these things. Now, in a very simple context, your music system, your music player, your camera, and et al. It goes on and on and on, all in one device. So that is dematerialized. Digital, you all understand what I mean, and disruptive, you understand what I mean. Of course, I want to add in dematerialized 2 things which are very obvious, but we don't take cognizance of it. One is work from home, learn from home, like all of you have been doing the last 1 year, like Uber, like Airbnb. It's a dematerialized world. And very interestingly, you will find that in a dematerialized world, you can still create a whole lot of value. So a dematerialized world and digital and disruptive, you all understand. So just to set it in your mind, democratic, dematerialized, digital, and disruptive. This is the world that you are in, and it's not going to go away anywhere in the near term. It's going to grow, and all of you will grow with it. I now move to one other part of this digital technology world, and that is to do with the economy. I will talk of the real economy in a moment, but since I'm talking of technology, I want to finish this. This I put under a phrase that I like to call the digital super cycle. The digital super cycle is, I would say, the culmination of all these technological changes on a business and the spawning of new businesses as a consequence. We can pick up any number of examples about this, but I think for business and for businesses, the challenge in this digital super cycle is how do you survive the disruption? And as I said, I will explain that one, what I mean as we go along, just in a moment. One aspect of this digital disruption is the cost of technology, which has dropped dramatically. If I look at the bank that I was heading, I think we ran technology at virtually maybe 1/20th, 1/30th, 1/40th the cost of older established banks. And I used to always wonder, why are people spending money on something when today you can get virtually free stuff? And I think the same applies to every business in India, particularly any business which is using technology, like let us say financial services. We will talk about it in detail in a moment, but clearly tech costs are dropping dramatically. In olden times, there used to be something called Moore's law. You might not have heard it, because you might think it is obsolete today, where the power of computing was growing at a dramatic rate. The cost of computing was dropping at also an equally dramatic rate. Today, it is now not Moore's law, but it is, I would say, a variant of Moore's law. The law is applicable to artificial intelligence and everything around it, where the compounding rate of price performance is significantly higher than it was during, when we talked about Moore's law. Moore's law was a squaring of price performance every 2 years. In AI, there is a doubling virtually, then it will square as we go along, every 3.4 months. So you can imagine the price performance improvement in AI in a 1-year horizon. If 3.4 months is the doubling time, my rough math says probably around 10x or so, or a little more than 10x in 1 year. That is the improvement in price performance of AI. I'm stressing this because this is disrupting a whole lot of businesses. And you, I know your cohorts, your classmates, people around you, your age group, are going to be living in this, are going to be celebrating in this, and you will have to understand how to do this. Let me pick one more example of price disruption. I was on Amazon the other day, and I came across a software that they had actually said is available online. It's called OK Business. OK Business has got an OK Business Dukan, it has got an OK Business Kata, it's got a staffer. Basically, it is running a ledger and an accounting system. All of you are commerce graduates or training to be. For a princely price, you know what is the price or what is the cost of this software package doing all these things? Rupees 29. Rupees 29 to download OK Business Dukan, Business Kata, and Business Staff, and I don't know what. I'm not trying to plug. I don't know what how good the software is. I believe it is. It must be good. But I'm just saying that things are available virtually free. 29 rupees is a giveaway. It doesn't mean anything at all. So things are available around you free. And that's adding to the disruption that I'm talking about. Now, if this is so in this business, just imagine some of the services that you were earlier working with a bank or a service provider and so on. Let's start with payment systems. Young people like you, I don't think you're using cash. I never used cash in China. In India, I thought I would use cash, but in the last 1 year, I don't think I've used cash to any great extent. It's all payment systems provided by various parties. The back end, there may be a bank because regulation requires that, but otherwise, the payment systems are basically front-ended by somebody, which is probably not a bank. And that, I think, is going to be the way of the future. The payment system is disrupted to the extent that the regulator allows it to be. The regulator allows it to be fully disrupted. You then go to broking. Today, everybody is into e-broking. And if you are watching IPL, you would have seen the guy advertising the most, or somebody called Upstarts. I will not use the thing, but you can. But you also heard of this company called Zerodha. Zerodha, you also heard that it is today the market leader. It has basically pushed aside incumbents who were there for maybe 20 years and gain market leadership. Well, how will they progress? We will see. But the fact is, a company which was a startup just 2 years back comes in and becomes the market leader in 2 years flat, using appropriate technology and so on. But there again, their technology is 2 years old. There may be somebody today with newer technology, more app technology, cheaper technology, ready to disrupt the world, which would mean that the entire chain of players, starting from the old established leaders to today's, who could be looked at as a leader, I think is ready for a disruption. Now, if this could happen in the payment system, and then it could happen in broking, what's next? I think it's the asset management companies. And if you look at the asset management companies, where there were fund managers doing a job, today it is basically ETFs and index funds. Why would I be paying 1.5% for somebody to manage my fund when I pay 25 bips, that is 0.25% for an ETF? And basically, I could go directly and buy the ETF. I don't need to go through a brokerage through an AMC at all. So a variety of disruptions that are happening is bringing your transaction cost lower and challenging incumbents. So you have a whole set of names. Again, the way business is done, if you look at Swiggy or now Zomato, I think these are the sort of new drivers of the ecosystem. My idea was not to plug these guys and say they're doing a great job. They are. Was to say that these are the people pushing the digital ecosystem and the digital super cycle, as it were. And they become the new employers. They become the new employment drivers. I would dare say in the last 1 year, these sort of firms have employed more people than conventional industry. And the speed of disruption is, to somebody like me, it is frightening, I would say. And unless you as a firm, you as a company are able to understand this and respond, you will be under threat. We'll talk about that at the very end as to what should be I would say, the response from the system or a CEO in this. I move on now. I think that's enough of digital. We have covered 2 or 3 subjects. We now have another 10 minutes or so, or 15 minutes maximum. Then I want to open it up to you guys. I go on to economic recovery, which I think is a fundamental. Upfront, I want to say that from my point of view, the steps that the government and the Reserve Bank took last year in March and April, May, were very appropriate. They were quick, and they were within what was within India's ability, I would say. And always the proof is in the pudding. Proof the pudding is in the eating, and they have worked. So these steps have worked. And the result was very obvious. The economy got reset virtually by end of May. Companies that started coming back into a production mode by June. They had ramped up production, and virtually by July, when I was listening to the CII National Council meetings, everybody was optimistic, and capacity at utilization come to 80 or 85, 90%. And I would think that while the first quarter results were bad, the second quarter results told a completely different story of an India which had quickly got back to its feet and had gotten reset. We talked about mind reset. Here, the economy got reset very quickly. One aspect of this which has not been talked too much in the media, and I think is important for all of us, that is the productivity gains that came out of this whole process of the reset of corporate India. It's very interesting. corporate India has gotten back to now 95, 100% production, with only about 75 to 80% of its shop floor workers, and in continuous process industries, maybe 90% of the shop floor of the workers on the floor. So the rest I put it as productivity gain. That's a huge plus for corporate India, because you would have been taught in your courses that to get productivity gains takes a long period of time and costs a large amount of investment has to go in. But here it took place virtually with no investment. Reset of mind, reset of business, reset of processes, and you could reap the benefits. Of course, there's a linked problem. How do you find employment for these 25% staff who may not do? My answer is they will find employment as capacity increases, new capacity is set up. Some may have to relearn a few skills and so on, or will be absorbed in other parts of the system as the economy grows. But these jobs would now mean that corporate India is leaner and more efficient. And if you have been tracking the performance of corporate India from, say, the second or third quarter, particularly the third quarter, and now the fourth quarter performance that has been coming out, I was just tracking the 300 companies or so which have reported numbers. At the net profit level, net profit is up almost 25 to 30% for the group of companies. We will have a final picture at the end of, let us say, this month, but I don't think it will be less than a 25% gain on operating profit. And this is on March 2020 levels. March 2020 year ending wasn't that impacted. So during a pandemic year, we would have shown that overall profitability levels are higher than what they were during the past. So I would think that the economy got reset very quickly. Corporate India learned very quickly. Productivity gains were seized, and they capitalized. There were two key steps taken by the Reserve Bank of India, which, as students of economy, you would have noticed, and I want you to appreciate. And one is there are three steps, I would say. One is interest rates. They held interest rates. The second step is the Reserve Bank governor made something clear, which no governor before this has ever said. And I again salute him for that. He basically said that I do not see interest rates going above 6%. Nobody actually dares make such statements, but he made that. Now that acted as providing a ceiling and acted as something very conducive to the interest rate environment. And under this conducive environment, corporate India, the individual borrower, every one of us could be could rebuild our lives as it were. Imagine if at the other end, Reserve Bank had said, "Oh, we fear inflation, we fear that, we fear this, interest rates will go up." I don't think that we would have seen corporate recovery happen, profits increase as much as they have, and all of you, anybody, not all, who has borrowed, still being able to meet his obligation. Other interesting thing here was the Reserve Bank made a third statement, the governor, that there's ample liquidity, and we're not rolling back liquidity. So three key steps: interest rates held below 6%, articulation of that, we don't expect interest rates to go up. And thirdly, liquidity is ample and it will remain ample. Statement made by the Reserve Bank. These three acted as a tonic, as it were, for corporate India. And clearly, given this economy has been firing, there have been a few pain points, but I think by and large, economy is doing well. Now, all these things reflect in one number. In your introduction, you alluded to my being on this committee for restructuring, the so-called expert committee. Now, we had anticipated that the total total assets which will be under stress and will need to be restructured could be around 8 to 9 lakh crores. Our assessment now is system-wide total assets. This is as of 1 month ago. We'll have to see whether this new challenge, the new spike in cases, has an impact. So this is about now 3 weeks or 1 month old facts. The actual number that we thought will actually be coming up for restructuring is only 20% of that 8 or 9 lakh crores that we thought. Clearly pointing to a revival, pointing to corporate India coming back on its feet and being fighting fit. I quickly move on to, I mentioned briefly about some of the fintech advances. The fintech advances will also mean a new set of digital startups will happen. I'm not going to go into this. These are all these companies which are funded by a myriad of private equity players, and these companies are not few in number. The last time I talked to my friend Mohandas Pai, he said, this is about a few months back, there are 50 to 60,000 startup companies in this new ecosystem. And I believe that they will provide momentum to what I call the digital super cycle. They're in a variety of businesses. They're in every business you can imagine. They are funded basically by private equity, not through the banks. So they don't have, by and large, they don't have debts, and they survive through their own funds provided by sponsors who I would believe have deep pockets. Equally, when these digital super cycle babies, these new startup companies come up, there will be a whole lot of other companies under pressure. Like I explained to you, what has happened happening in the fintech world. I would think that these players will, challenge incumbents in a variety of businesses, and they will leverage. Just to complete this part of it, they will leverage technology which is low cost, technology where the bar is very low. They can work, they can play with new technology, use technology, and these companies will become change agents, and they will use low cost and adaptable technologies. And as I said, they will work against incumbents who are stuck in the past. And again, whenever I meet people from established companies, this is the point that I make, that don't be stuck in the past, because a startup is going to be like an upstart and come at you. And you need to be sure that you are ready and you have learned, developed the skills to take on this sort of challenge. And clearly, in this this adds momentum towards growth, India's growth. So you have corporate India, which has come back, which is driving growth. The digital super cycle, which will drive growth. And I don't want to take this as an example, but the number of companies which are reaching 1 trillion or 1 billion, not a 1 trillion, 1 billion market cap. I think you are seeing those numbers increasing virtually every month. And that itself is a signal that these new companies will provide momentum. So second driver for the economy is going to be the digital super cycle, which is getting unleashed. And the third driver is going to be, as I see, what I call building India. I think the Honorable Prime Minister made a statement some time back that India is yet to be built. And there is enough to do for the next 25 years. Basically, if you take a look at the developmental effort that has gone into, let's take for this example, China, it's 25 years of growth. Why did growth happen? Not just in the manufacturing sector. It happened in roads, it happened in rail, it happened in ports, it happened in airports, it happened in metro movement within the rebuilding urban cities. All these are growth drivers. They mean you need steel, you need cement, you need glass, you need everything that goes around it. It means it provide employment. Of course, now you can superimpose technology on it. You can put in what I call sustainable infrastructure in this, make it greener and cleaner, certainly cleaner. You need to do your power generating systems again with the clean energy. So there is a whole lot of things. And I think our Prime Minister paraphrased it very well when he said, India is yet to be built. And I would believe that it is a 25-year agenda. So you've got conventional economy, the conventional companies which are providing, going on. The new digital players will provide momentum. And this, new India that is to be built, providing momentum and going. Quickly then, I will complete my chat in the next 3-4 minutes so that we leave some time for you guys. How do you lead in the future? In the sense, what sort of leader do you need? I'm talking about the corporate context, not any other context. I would think the key attribute of a person who is leading any business in the future is going to be this. I would put it this way: the CEO is or has to be a tech architect. He need not be a technology player, but he must have the ability to understand technological change, internalize it, and have a team which can execute that technological change. This CEO has to believe that he lives in a world of disruption, and he will not have something which is still. He will not have still water at all in his life. It will be always turbulent waves and turbulent water. He will live in a world of disruptions. He needs to make sure that at no point in time, his team, I'm stressing that, his team is not obsolete, and nor is his company obsolete. And of course, nor is the technology that the company is using obsolete. I can clearly say that almost every company will have to take a hard look at this, because if they don't want to be surprised. Of course, this brings you to the need for continuous reskilling of all the players in your company, all the players in your team, because what you learn is going to be obsolete by the time you are out of school. I mean, in the company context, by the time you implement technology, the technology is going to be obsolete. So you need to have the gumption, the guts to actually put that new technology in. And again, companies will have to be prepared to what I call the 10-year churn. The 10-year churn is very interesting. You got time, you can just look up. Today, Google search will tell you who are the top say 20 companies in India by market cap. Go to 1990, go to 2000, 2010, and 2020. We'll tell you a story. There are only about 6 or 7 companies every quarter, every 10 years, who survive into the next 10 years. The rest of them fall out. Some of them have been dead and gone. Some of them are still there, but not in the top 20. It clearly means there is a 10-year churn, and every company will need to see how does it behave, act, and manage to stay in the leadership cone, as it were, for the long run. So building a company which will last a very long time is going to be a challenge, and it is up to the CEO, the team, the board, all the players there to make sure that their company survives. Now let's just go in the last point that I have, the current scenario, just 1 or 2 minutes. I think the vaccine rollout is robust. The challenge that we are seeing is not in injection. I have been closely following the process since March 1st, as it were. The vaccination itself is not the problem. I think the COVID app, I've been a user, whatever criticism you see, I think the app works well. We need a little more discipline in making sure that we only go by an appointment and a scheduled thing, because that was working very well. I don't think there was any need for we can have support centers for people who do not have tech access. Please do that, but figure that out. The challenge, as I see, as it is now coming out, is the production of vaccine. We have a capacity constraint, which I believe that in the next 6 weeks should be addressed. And the moment we go to from a 2.5 million or so production capacity on a daily basis, the moment we go to say about 5 million, which should be in the next, I would guess, 2 months, I think things will then come back to normal. You guys can do the math for how to vaccinate and so on. All we have to keep in mind is at this point in time, nowhere in the world, people below 18 are considered safe. So I hope that is so, because in that case, then the load on getting quick vaccination done is only probably 55% of the population. I hope, of course, we can vaccinate everybody, but that is yet to be proven that that vaccine can be given to younger people and that can be given. I hope that is done. So I would think the vaccine problems will be addressed. The lockdown problem, I think we have learned from the last lockdown, but clearly localized lockdowns probably are required, as we see in Maharashtra. And Maharashtra hit the brakes much ahead of anybody else. We hit the brakes on April 14th, and you can see the curve, I think, bending pretty sharply in Mumbai. So there are lessons which we can learn from each other, and I'm sure we have learned it from the previous lockdown. The challenge, as I see, is the last one that I'll make. The people who will need help are, what I call the informal sector, self-employed people. They will have pain under this lockdown also. And I was delighted to see the Reserve Bank governor yesterday offer a relief package. And I hope the government also will provide some more relief if required to these people. That is food grain. I would say the government has extended that scheme by two months to provide free food grains to people. Reserve Bank providing a helping hand will go a long way. Finally, lessons that I have learned in 4 sentences. There is no one-size-fits solution available. So you need to every time learn and relearn. Companies have learned, companies have made cost variable. Technology is now mainstream. It is not a silo anymore. And I think as we go forward, we need to calibrate lives versus livelihood very carefully. I think both are important. We need to calibrate. I end by saying that, I honestly believe that the youth of today are living in times that nobody could have dreamt of. And you have the future in your palm, as it were. Go and strive it. And I don't mean it just because I got an audience. I mean it because I truly believe you got it in your hands. You have technology on your side. You have mastered technology. You were born to technology. Our generation was. We had to learn that the hard way. So you are like just at the right time. You're just in time. So go and seize the opportunity. India has 25 years to grow. India has a digital super cycle to grow. And the existing industries are not falling off the way. So all good luck and all good wishes.
Thank you so much, sir. We have a few questions which we were asked by the participants. May I go ahead with them?
Yes, please.
Okay. So how do the accumulation of loans of the private sector affect the entire economy? Should the government take an active role and try to clear such loans themselves?
No, I think the question really is talking of probably the non-performing assets accumulated. And as I see it, the non-performance assets, I think I mentioned it in passing. We had expected that the challenged assets having a challenge would be around 9 lakh crores. But as it is, with the improvement in the working of corporate India, we expect that to be only about 20% of what we had estimated. So the pain is going to be much lesser. And I think that is being addressed. So this worry should not be there. And even at the individual level, I think the Reserve Bank is giving a helping hand. So should not be a worry.
Okay. Can India adopt the China model for startups?
Well, the China model for startup is a tricky model. There are 2 models. One is in the corporate world, in the manufacturing world, in the infrastructure world. The model was predominantly led by government and government companies. So that's not our model. Our model is the private sector, and I think we will do well with the private sector model. In the technology world, their model is private equity funded, and I'm sure our model is also heading that same way. What we need to probably lay stress is on a little more of innovation. I guess in the next 2 years, we'll see a whole lot of innovation.
Financial inclusion in India has been pushed by the government. In such a scenario, do we need more banks or better regulations to regulate existing banks?
I think regulation is now, on par with anywhere in the world. So we can hold our heads very high. The banks used to have a challenge, say 2 years back, because they did not have capital and or their non-performing assets were providing a challenge to the capital. Both issues are now resolved since the government pumped in capital into the public sector bank, the private sector banks raised money, and the balance sheets were cleaned up. So banks today are, I think, in good shape. The challenge is coming from somewhere else. As again, I briefly touched on, it's coming from technology. So banks will have to learn to deal with technology, and or else new players will come and use technology and provide the service. So the common person, you and me, I don't think we have to worry about this at all.
Right, sir. The setting up of a DFI has been appreciated for focusing attention on the long-term intra-financing, but has been criticized for being unnecessary as the banks are sufficient. Which side do you feel more strongly towards?
I think I have worn many hats. For 40 years of my career, 30 years of my career, I was a development banker. Basically, the DFI, ICICI was a DFI. Then ICICI became a bank. So And for a reason, actually, I took the lead in transforming it from a DFI to a bank. So asking this question to me is very tricky. Now, I did it because for a purpose. And in one sentence, in the 90s, after 40 years of existence, DFIs had a problem in finding the funding. So earlier on, funding was coming from bonds which are government guaranteed. The moment that guarantee was withdrawn in say 93 or 94, DFIs didn't have funding. So you had to convert to a bank to survive. That's why it happened.
Right. So
Now there are pension companies, there are life insurance companies which have the funding to fund a DFI. And today, if we have to go for 25 years, you need long-term funding which the banks can't provide. So I'm now clearly on the side of this doing good rather than harm.
right. So isn't ARC the correct way to handle the NPA problem in banks around us? Which will be the greater effect, harm or the benefit?
Oh, it's a clear benefit. ARC is a benefit, but the challenge is you need to see who's going to bring in the capital and how will you transfer the assets. So if somebody can capitalize the ARC properly, it can be done. In China, because you asked China as another example, ARCs were put to very good effect, but the capital and backup in a way came from the government. Now that is probably not going to happen in India. So we'll have to figure out how it will be done. But clearly, ARC has its benefits.
Okay. We have one more question. How has the business model changed after the COVID disruption?
I think I talked about that in some length. It is now a technology-led business model for everybody. And they have found that technology has given you productivity gains on the shop floor, to better efficiencies and management of efficiencies. And in our real world, your and my daily world, we are seeing technology driving. So the business models have changed dramatically post the COVID world, with technology being interwoven into everything we do.
Right. So as this session draws to an end, I, on the behalf of FIC of SRCC, would like to extend my heartfelt gratitude to Mr. K.V. Kamath, who took out time from his schedule to share his wonderful insights with us. I would like to thank the professors of SRCC for their support and all in attendance for today's session. Thank you for making this session successful. I would request.
Yeah, thank you. Delighted to have been here. All of you, please take care, stay well, stay safe. Good wishes to your family. Good wishes to your teachers. Bye-bye.
Just a second, sir.
Yeah.
We have a vote of thanks by Rishabh Khitawat, the Secretary of FIC, for you.
Yeah.
Once again, thank you so much, sir, for joining us and sharing your profound knowledge with us. It has been our highest honor to host you today. We look forward to having you on campus with us and learning from your wide experience. As young individuals, we could understand the intricacies of the current situation is and what can be done. I also would like to extend my thanks to all the participants for joining in. I, on the behalf of the cell, express my gratitude to our principal and our teacher in charge, Ms. Saroj Joshi, for their endless support. Thank you so much, and I hope everyone stays safe in these difficult times.
Thank you very much. Stay well, stay safe. Good wishes.
Thank you, sir.
Bye-bye.
Thank you, sir.